Goodness, I have a lot of hair. I need a haircut. Anyways, this is part 3. Let's get into it. It's just a combination of the confluences together, and I'm gonna go into detail of how the model looks as a whole, just combining it together. And yeah, I have a lot of examples from today and previous examples if needed. But yeah, let's jump into it. Take 3. Alrighty. I'm gonna go into just straight up today. I'm gonna show you exactly what the model is and how I trade it. It's same two confluences I told you guys already. Liquidity sweep into IFVG, inverse fair value gap / fair value gap. And yeah, I'm gonna show you exactly what I did today as my examples. Where's the pre-market? Select bar. Pre-market. That's a 6:30 candle. All right. First thing I noticed today was I'm gonna mark this out right here. Internal liquidity right here. Internal high. Internal high. What else I noticed on the 15-minute time frame? There's a fair value gap right here. There's two fair value gaps, but this one's already got invalidated, so I'm gonna use this one. If I measure out the top of this wick all the way down to the bottom wick, it's 65 points, which is above criteria of a fair value gap of being 40 points. Also held this gap, so yeah, that's all I need to know. With that being said, what did I notice? Price came up and we swept this high and price shot right back down. What does that tell me? As of right now, as long as we hold below it, we have a bearish bias. So I'm looking for some sort of short model. Let me play another candle. Oh, what the fuck? Well, this already happened this morning, so I already knew what I did. But here, this is the trade I ended up taking. Okay, just like I said earlier, I had a bearish bias. But being that price came back up and held above that high at this time of this entry, my bias was bullish. We ended up inversing this, and I ended up aiming for 30 points because I wanted a 1-to-1 RR. But I would end up missing the TP by a couple points. Unfortunately, I would end up losing this trade because, as you can tell, price did come back down. But this is exactly what the model is. It's okay to take losses. No model is 100%, and that's how it is. I had to keep myself a clear mind and just keep trading. With that being said, I just removed the setup because it's now no longer validated. Price came through the fair value gap, the 15-minute fair value gap, and took out all the contracts there, and I have no more setups there. What did I do after? I just waited. What did price want to do now? Boom, boom, boom. Price looked like it was chopping. Okay, it just made a nice leg down into our objective. Nice. First thing I noticed was price took out our London low, which is an objective, the liquidity sweep. Now I'm looking for the reaction off this. If we hold below it, then I can potentially take a short here, right? Because this is also a 15-minute inversion or a 5-minute inversion, as I have it very pre-marked out, targeting this low. Or I could wait, and I have another fair value gap right here. How do I know it's a fair value gap? If you look at the 3-candle sequence, the first candle's bottom wick is right here. The third candle's top wick is right here. It left the imbalance of price in between for me. And yeah, I just watched it. Now I'm waiting for the reaction of the liquidity sweep. I have setups in both directions. Price is now holding above our liquidity sweep, meaning that's telling me that banks brought the price down, swap out to this level, and are satisfied as long as we hold above that London low. With that being said, I have a bullish bias. We tapped into the 5-minute fair value gap. I want to see the reaction off the 5-minute now. We sold off of it, telling me that, hey, sellers are strong here. Sellers are here, so if we do inverse this, we are going to see higher for sure. So this is my two setups. I cannot look for shorts anywhere in this leg until we hold below this most recent sweep. So it has to be longs, and these are the two setups I would have right now. I just wait for price. Let price do its thing. Okay, price is coming back up. Okay, so I can't really show you guys my entry, but my entry would be probably somewhere within this range because you guys just tell price swept the high, we're holding above it. We have a bullish bias. Following bullish bias, we disrespected bearish order flow by inversing this gap, and now we're seeking higher. My price target would probably be 1-to-1, right? But realistically, you also could target New York AM high. This would be the New York AM high, and even London high. Excuse me. Because why? Well, like you guys know, I trade in between a range. It's the previous session ranges. My previous session low was taken, but my previous session high was not taken. So this could be the next potential target. And if we play it out, we took it out. We got a 15-minute retracement too on the 15-minute time frame into this gap for another entry if you guys want it. But that's the gist of the model itself. We swept out our liquidity, and we waited for the reaction. How did we get the reaction of a bullish bias? Well, we saw that price was holding above it and displacing up. Following that, how did we get our entry model? It was off the 5-minute time frame, off a 5-minute inversion. And it's as simple as that. And you know what? Just because it's already here, I'm gonna show you guys this too. A continuation model. I'm gonna get rid of this. Being that we missed, let's just say I missed this move. I missed it. We also created a 15-minute fair value gap right here. It's 154 points, which is above the 40-point criteria of a fair value gap. And then if you see the top wick of this and the bottom wick, we created an imbalance. That being said, now that I have price tapping into this imbalance retracement, I'm looking for a 30-point bounce. Why? Because we didn't take out any liquidity yet. Our first liquidity pool would be the New York AM high, which we did not take at the time. So if you go in the 15-minute time frame off this retracement, I look for a 35-point bounce off this retracement. Our most recent liquidity sweep is still down at this London low, so my bearish, I still have a bullish bias, sorry. So therefore, because I have a bullish bias, I'm gonna see this right here. This is what I see. I see a price come back down into a 15-minute time frame fair value gap. 15 min. That's my higher PDA. Tapped into it. Price displaced back up by 35 points. I entry trigger, and I'll just target the first bull liquidity, which would be the New York AM high. Would be my New York AM high, and my London high, and that's my continuation model. It's just convenient that today shown both. Unfortunately, I did take a loss today, but that is the model itself right there. We react off the most recent liquidity sweep, and then we trade a fair value gap to push. We use the fair value gap to push price where we think it's gonna go, and we enter and ka-ching. Yeah, that's about it. The two confidence that I used to make 100K in the past 2 months. Ka-ching! And yeah, goodbye guys. See you guys in the next video.